You're watching The Week Ahead. I'm Darren McDermott. Today I have Larry Hatheway from UBS on the line. Larry, if we begin by looking at the US, investors are waiting for the Fed meeting this week. Now, tapering is not expected to happen until the new year. So what are you expecting to see from this week's meeting, and what sort of market reaction do you anticipate, Larry?
Yes, I think the Federal Reserve is going to recognize the improvements in the data flow. They'll probably upgrade their verbal assessment of the U.S. economy. They may also take note of the recent agreement on Capitol Hill to avoid a government shutdown, to find a way essentially to keep the government open and potentially, although this remains to be seen, to avoid some of the political disturbances that might come from also lifting the debt ceiling, which must be accomplished by early February. And to that extent, the Fed would be acknowledging that two of the risks that it cited when it decided not to taper back in the middle of September are in fact less than before. That will allow the Fed, I think, to really prepare the groundwork for the tapering decision, which will be then implemented in the first quarter of next year.
Turning our attention to Europe. This week we have eurozone CPI out, BOE unemployment and UK retail. Now, Larry, are you expecting to see positive data?
Right. So in both cases, we'll probably see a continuation of the recent trends. There's no real reason to believe that we've sort of peaked in terms of the recovery of the UK economy. The high street is probably going to be fairly buoyant on the basis that the recovery is now pretty well entrenched across key sectors, including construction, where there's some employment pickup, as well as in trade and investment. I think this is going to be, for the first time in a while, a slightly improved picture as we go into the key holiday shopping season for the UK. Bear in mind that low inflation and falling inflation is also a lift to incomes in the household sector. Same is broadly true within the eurozone. To be sure, the picture there is pretty uneven, with growth restored in some economies, essentially stagnation in others, and still ongoing recessions in yet others, particularly in the sort of more, let's say, challenged parts of the periphery. But in general, the pickup in global output, as captured by purchasing manager indices and by some of the trade figures, suggests that the picture is brightening across the eurozone as an aggregate as well.
Now, Larry, looking at Asia, the Bank of Japan today said Japanese business confidence has climbed to a 6-year high, underscoring growing optimism among major companies despite a slowdown. So what sort of impact will this have on the markets, and what are you expecting to see from the BOJ rate decision?
I think the Bank of Japan for the time being is probably on hold and reflecting exactly what you cited there in terms of the survey. It should be noted, however, that there's probably a bit of disappointment around some of the capex intention numbers, and maybe also in some of the smaller smaller firms within the economy. The Bank of Japan, of course, is aware that with the introduction of the higher rate of tax on consumption in April of this year, there's going to be a bringing forward of some spending. So the numbers will probably look pretty good for Japan, both on the basis of greater domestic demand, but also the improving world economy through the first quarter of this year. All that said, we do expect the Bank of Japan to prepare the groundwork for another easing of monetary policy around April, around the beginning of the new fiscal year, for the simple reason that the consumption tax is not going to be offset by other fiscal stimulus measures, not fully offset anyway, and from that perspective, a weaker Japanese economy in the middle of the year will require more support from the BOJ.
Larry, as always, was a pleasure speaking to you today. Well, viewers, do stay tuned as we have plenty more coming your way.